Morning, everybody. Welcome to Froggy Socks. Nothing I say is financial advice, entertainment purposes only. I'm not a financial advisor. Blah, blah, blah. First, I want to just say to Astro, thanks for the very nice opening in your video and what you said about me. I also have very high opinion of you. I like you. I like what you do. The tweet that I made was not intended to go after anybody personally. It was to raise awareness on the fact that the options chain weekly calls, and not even that, monthly calls, seem to be consistently getting blown out of the money. And I was bringing awareness to people that when there are tweets talking about jumping into AMC calls, especially from very, very influential people in the movement, that it's not a green light to just jump in and buy calls and lose your premiums. On that, yes, most of the money in payment for order flow is paid out for options flow. That's been cited multiple times in multiple sources. Citadel paid more for options than they did anything else in payment for order flow circumstances in 2021. So it's something you should look up. Now, the whole point of no options May, why we're extending it to November, is because it's been working. Multiple people that have been following my Hoyles method have been buying the dip perfectly like clockwork, because the market makers love to shove the price down below the highest open interest on the lowest strike for the call side. If there's not a lot of calls, but there's high open interest on the lowest strike for puts, they still try to shove it down, which is why they're aiming for $10 this week, because there's over 16,000 puts on $10 that the market makers can't afford to lose. Because what happened is most of retail backed out of the Hycroft options chain and the AMC options chain, and now there's no premiums to steal, so as the lack of incentive for market makers to drop the price. But I'm very honored that you made a 15-minute video about me over a 30-word tweet, 30-letter tweet. Anyways, moving on. AMC Theaters took 26% of the domestic box office for Multiverse of Madness, which scored $187 million in 4 days. It's $48.5 million for AMC in 4 days, and it just crossed $200 million. I went and watched it the second time in 3D last night. I'm telling you, I thought the CG when I first saw it was a little off, but it's because it was meant to be seen in 3D. I promise you, if you go see it in 3D, you're going to love it. On top of that, we have Top Gun coming out. We have Jurassic World Dominion coming out, Avatar 2, just all kinds of good movies, you guys. It's absolutely amazing. This price action we talked about last week, Hycroft is doing better than I thought it would. It's keeping the 125 bottom. It's fighting for that support. I absolutely love it. AMC is down in the dumps, but we knew that was going to happen because the highest open interest on the lowest strike per last week, when I called it out on, I think Wednesday, was $13. Then somebody came in and loaded up the puts on the $10 strike. They're trying to get it down to that $10 price. It's absolute insanity. It's price fixing at its finest. And this is why I tell people to stay away from the options chain. Because what happens is Citadel pays your brokers for the options flow. Then they come in, they use that flow as a crystal ball to front run the market for them and their buddies. The major three market makers, Susquehanna, Citadel, Virtue, that are always cited, they're short AMC. Maybe not the exact company that is the market maker, but their side company like Citadel Advisors is short AMC, Citadel Securities, whatever it is. It's the game. They front run the market. They crush these companies into the dirt by generating FTDs circularly every freaking couple weeks. They knock the price down. People get ripped out of their options. Their call options premiums are lost. Citadel takes all that money in. Then they start covering their FTDs slowly. We see a little rise in price, and then they do it all over again. Stay out of the options chain. Gamma will happen without retail. I guarantee it. Gamma happened on the VW squeeze, and it was very much without retail. You guys, these market makers and these funds and banks will eat each other alive. You don't have to lose your premiums. But if you own the raw stock, if it goes down and you don't sell, you don't lose. If it goes up, you're up and you can decide to sell for a win. But if you have options that expire out of the money, if you don't exercise the calls, You're just giving market makers your premiums. It's on meme stocks, it's absolutely terrible. Market makers like Citadel are using payment for order flow to find consolidated masses of money from retail investors, which is all the meme stocks. That's why we're down in the gutter. Stop letting them take your premiums to generate liquidity to push the stock price down further. They're trying to flip their position and go net neutral by using the options chain. It's the simplest, most common sense, clear as day thing you can find. And even Dave Lauer posted about how the options chain was just robbing retail blind, man. And everybody loves Dave Lauer. It's just common sense, you guys. My theory, and I'm not telling you what to do, I never have, is buy raw shares, especially at this price. I'm buying tomorrow. I have more money flipping over, and I'm hoping to get it at 11 or under 11. Buy raw shares, so if we're down, you can hold and own the stock. If we're up, you can decide to sell to take profits whenever you want. It's just a more responsible way to invest. The options chain is literally like playing blackjack against the house, and you only get one card per turn. It's crazy, man. Anyways, with that, catalysts, man. I don't have a lot of like slides and stuff for you today, but we had Adam Aaron, which you can go watch the earnings call on my YouTube channel. It's a really good video. It's really clean. It starts about, I'd say, a quarter of the way through. You can skip through all the chit chat from the Twitter Spaces call if you want to get straight to the earnings call. He specifically talked about catalysts coming up at the end of the year. And I think it might have had something to do with his Doctor Strange comment 4 times in a row. We have 4 catalysts in Q4 for the win, right? We have popcorn dropping at the end of the year, retail popcorn in grocery stores, an AMC branded credit card. We have Hycroft mining that should be full-scale commercialized operation by Q4. And what was the other one? Crypto. Yeah, crypto. They're talking about crypto again. Those major catalysts, I mean, if all those drop in Q3 or Q4 and Hycroft comes out and announces full-scale commercialized operations, those are such big catalysts that if we haven't already ran, we will definitely see some action. But again, I wanted to talk about a catalyst that doesn't necessarily have anything to do with the company. I want you guys to look at the daily charts, man. Don't worry about all the lines and stuff I have on here. That's for me and my Hoyle's method, the high open interest, low short, lowest strike price. Look at where we were at here last year. This line here, May 24th, 2021. We are a week away trading day wise from May 24th. This is where the big run started to 72. Now it's really interesting I say that because we're coming up on that same timeline. We're back down to that bottom before we ran to 72. Look at that. We're right on this line right here. It's crazy. But if you also look at the crypto market at the same time last year, it's doing the same thing also. And there's been so many good theories that I've completely agreed with on how hedge funds are using crypto to manipulate these stocks. It's a massive liquidity generator. Look at this right here. Let's see. Where are we at? Sorry, I lost my path here. There it is. So May 12th, Bitcoin decided to take an absolute dump for almost a month up until July, right? Look at where we're at now. So it started back in November, but we started dropping. We lost another 30,000 like it did here. You get here, we had that big run to 60 and it dropped again, right? Well, now we're getting hit hard again at that exact same time frame in May. Look at that. Boom. We dropped over 3,000 to 4,000 right here in May. We dropped here in May and we dropped again here in May. And that's after a big pump and a slow liquidity burn as these hedge funds were losing money day after day by being in a bad position on these meme stocks. And think of this area from here to here. All the blue chip stocks just got bled alive that entire time. So they're hurting for liquidity. They're taking the last bit of liquidity they have out of the crypto markets to try to fix what's going on with the meme stocks right now. It's the only way they can meet margin requirements. So these dates, man, May 5th, May 10th, and then back to AMC. Look at that. May 24th. May 10th started the little rise here before we went crazy. May 10th through May 24th, and then the 72 run in June. May 28th through June 6th. And that's exactly where we're at now. We had a little bump here. Now we're back to our base level before we ran. And, May 24th is here. So it's crazy. There's so many indicators lining up in the market right now. I mean, it's not a coincidence, you guys. We have AMC looking to be profitable by Q4. I think they're going to do it in Q3 because Multiverse of Madness is absolutely crushing the box office. Top Gun is going to blow up the box office. Everybody wants to go see Top Gun generationally, from your parents, grandparents, all the way up to the younger kids who are, 16, 17 years old. It's just a perfect time for a movie to drop. And from what everybody says, not just Adam Aaron, anybody who's talked about seeing a pre-screening of it for the past 6 months has said it was absolutely amazing. So to recap, we have our charts looking exactly like they did, except on a bigger scale from May through June of 2021 before the big run. Except this time, market makers and hedge funds and banks have at least 40% less liquidity than they did when we ran to 72. Also keep in mind, the community is 10 times smarter than it was during the 72 run-up. We just came out of the January 28 buy button scandal and everybody was beaten down and depressed, right? A lot of people jumped ship, missed the run. Now we have more investors that own most likely the entire float or more of AMC. We know their shares out past the legally issued float, probably in the billions. The market's smart. Everybody's in their positions. Everybody's buying the stock. Everybody's going to the movies. We're going to be profitable by Q4. Hycroft's going to be full-scale commercialized operations by Q4. It's absolutely amazing. Do market makers have more tricks also? Most likely they probably do. But I'm going to say they're hurting more than they ever have been. That's why I can't stand people that are consistently going, buy call options, sell covered calls. One, if you sell covered calls, you're hoping the stock goes down, so you're playing against the market. Two, if you buy any type of option on any of the meme stocks, you're directly funding payment for order flow. You're giving Citadel a crystal ball and funding payment for order flow. If you are going to buy options, I'll say this, if you're going to buy them, the theory is, and this is not my personal opinion, you want to buy deep calls. Deep in the money, deep out of the money, whatever you want to call it. The calls that are out to the deep strike prices out further in time. The deep fucking value method, whatever it is. I think everybody should just buy the stock. That's my personal opinion, but you guys do what you want. On top of that, too, my thing that I'm seeing besides the big catalyst I've named, the return to profitability, Adam Aaron seems to be geared up to be getting ready to do something because he directly mentioned dark pools, naked shorts, synthetic shares, all of it. And he was very cryptic in the way he worded it. And he even said, the news came out and tried to bash everybody this week immediately. He even said most likely the people sending them threatening letters were short sellers. Me what? They will be close to profitable in Q2. I agree. The company is just being conservative, in my opinion. Yep, look at the box office mojo numbers. Absolutely. I think I'm going to say conservatively Q3, but me what and a couple other people that are smarter than me have predicted Q2 also. Let's see. Zombinox. The original Top Gun came out on my 12th birthday. I remember seeing it in the theater. You bet I'm going part 2. Awesome. I loved Top Gun, man. I didn't get to see it in theater, obviously, because I was born in 85. But this is my comeback. This is my chance to go see Top Gun in theater. I love that movie. I think from what I've heard, the way they made this movie was so realistic. It's going to be wild, man. People need something more real, less CG and more real in this era of the CG film industry. I can't wait to see it. So we have all the catalysts. We have the charts lining up perfectly. Cyclical runs, very, very cyclical. The hedge funds are in way worse shape than they were a year ago. We are in way better shape than we were a year ago, and we are way, way smarter. We have more information, more knowledge, and more resources. AMC is looking like it's going to be profitable. They have a bunch of catalysts up their sleeve. People are going back to the movies. COVID is over, basically. There's nobody talking about COVID. I still see people out with their masks on, but that just shows me that they're comfortable enough now to leave the house and to go to the theater. So I think we're going to see theater attendance rise each month. And I think Jurassic World Dominion is going to be a big one for families to get the kids out of the house and into the theaters. Minions 2, the Rise of Gru, it's going to be huge. Lightyear is going to be great. So you guys stay strong, man. I know it sucks right now, but we knew this was coming. We've been talking about it. We've been talking about sub 13. People have been talking about $10. I'm still following my Hoyles method. It was sub 13 until about 3 days ago or 2 days ago when I noticed that there were 16,000 open interest on puts loaded up on the $10 strike. Now I'm going to double check. I'll do another video tomorrow. What's up, Froggy Styles? Thanks, man. Yeah, if you guys could hit like and subscribe, I appreciate it. I'll never ever charge a dime for this channel or take any donations whatsoever. It's all free all the time. But yeah, I'm gonna do another Hoyles breakdown tomorrow for the options chain for next week, the week of the 20th. Because right now, the last time I checked, it looks like Hycroft wants to do a $2.50 run and AMC wants to do a $20 run based on the highest open interest on the lowest strike for the call options, balanced out by how many puts are equally on those calls or below. It's the whole theory is what strike price is most beneficial for market makers to push below to take maximum profits, take maximum premiums, right? Max Pain is bullshit. Max Pain will tell you $16, but there might be a ton of calls and puts down at 13, and the market makers are going to sink it to that just so they can steal those premiums. Zamanak. Stephen King Salem lot could be a sleeper. I agree, man. Sam screenwriter, IT, and yep, it in chapter 2. It made like 700, man. I agree, man. I think people are looking for thrills and chills right now. And I think that's why Doctor Strange did so good, because Sam Raimi put really classic horror elements in it. Kobo, what's up, guys? JD, margin requirements increase under $10. I do not know that for sure. I would assume that I wouldn't see why it would. I don't know enough to talk about that. I'll look it up. I know cost to borrow is going up. We've been at 100% utilization for a long time. We have other weird companies that are starting to squeeze out, like Redbox is going crazy today again. But I'm telling you, man, look at our chart. We are at that base level where we popped last time, that $10, $11 range right here. We're in the same time frame. We had the little bump here. We got the little bump here, but we're on a much larger scale now because there are so many freaking shares out in the market. Anyways, that's a quick little catalyst video I wanted to do. I hope everybody has a good day. I hope I didn't hurt Astro's feelings. Love you, buddy. He's a good guy. I wasn't going after him in any form or fashion on his personal personality or his whatever. He's a good guy, man. He does great videos. I'm just trying to bring to light to the community that getting in weekly calls and even monthly calls is just getting people blown out. That's why we're extending No Options May, because we have found out anybody who's been following me has been buying the dips. The last dip we bought on Hycroft was $1.25 and it ran to $1.98. And I know a lot of people took profit. I'm not saying you got to buy and hodl on Hycroft. Use it to make your liquidity generator run. You know what I'm saying? I think Hycroft is owned enough by institutions that support us that you can take some profit and generate some more funds to dump into other plays like AMC. So love you guys. No options May, no options to November. That's what I'm screaming. You guys do what you want, of course. I'll never tell you what to do, and nothing I say is financial advice. So, hey, Miss Harris, thanks for coming in. Good to see you guys, you and Froggy, man. You guys check out Froggy Styles YouTube too, man. Froggy puts out, and in his Twitter Spaces calls, his TA on the charts is so very, very common sense and clean and direct. And I've never, ever heard him say anything I didn't agree with on his TA. It's not a dude on YouTube going, look at all my charts. Oh my God. Look at my neon lights in the background. Oh my God, I'm a gamer. He's clean. He's straightforward and direct on his TA. And I actually go there to hear his TA because I don't do much TA myself. I don't do very much charting other than what you normally see or what I say. And I don't even like to say that because most of the time, anytime a YouTuber comes out and says, this looks really bullish, it's about to break out, then the market makers come in and go, yeah, that's what I wanted you to say, because everybody jumps into call options and then they dump the stock. So go check them out, guys. Give them a like and sub. Anyways, I'm going to get out of here. Puppy's staring at me like he wants to go outside. So y'all have a good day. Froggy Stunks